first day of seminars in our brand new facility. This member and staff education center has been our dream for several years, so we're very excited that you're able to join us this evening for this event. My name is Mary Hansen. I've been the CEO of the Mayo Credit Union for 21 years. And excited this week we have a number of excellent educational sessions that you're welcome to join us at. Please check those out on our website. We'd love to see you or your family members also on Friday afternoon this week between 11 and 4. We're going to have a benefits fair. We'll have booths with many different topics, such as financial planning, how to buy a home, how to buy a car, saving for college, all sorts of different topics, and a job fair for those that are interested in working at MEFCU. There's really nothing we enjoy more than helping you save money on a loan or make more on your savings. So that's our mission, that's our passion. So please share the good word about us with your friends and your family. Tonight, though, you've joined us for a seminar on home buying, and your presenter is Sheryl Peterman. Sheryl had joined our team back in December of 2002, and she's been an integral part of our mortgage department ever since. It's been my pleasure to host seminars with Sheryl on home buying on the Arizona and Florida campuses, and to hear directly from members who have had their dreams fulfilled by the mortgage assistance that Sheryl was able to offer. She can take a rather complex process like buying a home and break it down into understandable parts, and she's there along the way to assist you. So without further delay, I'll introduce you to Sheryl Peterman. Thank you.
Thank you, Mary. Good evening, everyone. Thank you for attending. We're going to be talking about home financing and purchasing a home. My name is Sheryl Peterman. I've been here for 20 years at the credit union. I've been in the mortgage industry for 30 years. The objectives of today's seminar is we're going to learn how close you are to actually buying a home, identifying available loan programs, understand the players and their roles, know your next step, and be ready to apply. Why buy? Home ownership may be affordable for you, and quit making your landlord rich and start financially getting ahead for yourself. You're probably closer to your dream than you would think. Some advantages and disadvantages of purchasing a home. Buying advantages, you're building the equity, so when you're making your payments, you're actually building equity in your house. You can decorate and landscape and do whatever you want because it's yours, and you have a sense of achievement and pride in owning a home. The disadvantages are you have to pay for the maintenance, your property taxes, which sometimes seem to go up every year, and possible declining value. Renting advantages, it's definitely easy to move and little maintenance responsibility. Renting disadvantages is you're not getting any equity and your rent would increase, and sometimes there's maintenance headaches. If something happens, you gotta wait for somebody to come and fix it. We offer a different array of mortgage products. Our most popular are the fixed rate mortgages, so they're the 10, 15, 20, and 30-year terms. We also offer adjustable rate mortgages, which we call ARM loans. Those are 5 and 7-year ARMs. We also offer FHA, Federal Housing Administration mortgages. We offer VA mortgages, guaranteed by the United States Department of Veterans Affairs, and then a home possible mortgage also, which is a lower down payment program. The most common types of mortgages, generally these are sold to the secondary market, so that would be Fannie Mae, or Freddie Mac. The conforming loan limit is $647,200. And if you're looking for above that, it's considered a jumbo loan, and that loan is $647,201. The types of conventional mortgages are fixed rate mortgages, adjustable rate mortgages, which is an ARM loan, or home possible loans. Fixed rate mortgage programs, maximum loan to value is from 97 to 95%, down payment 3 to 5%. Your minimum credit score should be an upper 600 range, and private mortgage insurance is required if you have less than a 20% down payment. The adjustable rate mortgage programs are the 5 or the 7-year ARM, so the rate is set for the first 5 or 7 years, whichever program you pick, and then the payment is amortized over 30 years, and the interest will remain the same for the first 5 or the 7 years, and then it can change annually 2% per year with a 5 to a 6% cap. FHA loans, a maximum loan to value is 96.5%, so the minimum down payment is 3.5%. Your minimum credit score is 620, which other factors would apply. Gift funds from relatives are allowed, blood relatives. Private mortgage insurance is required for the life of the loan. There's an upfront funding fee of 1.75 of the loan amount, and there's a monthly fee for the life of the loan. Maximum loan amount is set by the county where your property is located. Home Possible is a program for borrowers looking for a lower down payment, including first-time home buyers. Generally, single-family homes, some townhomes, some condos, 30-year fixed, 30-year loan with a fixed interest rate. Maximum loan to value would be 97%. No minimum credit score, however, the loan must score accept, and that's kind of that's something that we would do in the office. And the borrower eligibility, you cannot, as of the note date, have any ownership in any other residential property. So you can't own another home and qualify for this program. Down payment, gift funds from a blood relative are allowed. There's no reserve requirements. Private mortgage insurance is required. Income limitations, income cannot exceed 100% of the median income. So for example, in Olmsted County, $89,200 is the maximum income. And there's home ownership education, which is required, and that's done online. It's a pretty easy process. Pre-qualification is good, but the pre-approval is definitely better. So a pre-qualification is if you call me on the phone or you come into the office and we meet, I'm going to tell you what you can qualify for. And we don't pull credit, we don't do anything at that point. A pre-approval tells the sellers that you have the ability to secure a mortgage. So a pre-approval is when you actually fill out the application online, we pull your credit, and it would be a hard pull on your credit, and then we give you a letter. So you can take that letter to open houses or give to your realtor to let them know that you've checked your credit and everything looks good. The application process. After selecting your lender, you may be asked to supply the following documentation: Copies of recent pay stubs, which we normally ask for a couple of pay stubs. Your last 2 W-2s. And if you're self-employed, we would ask for a year-to-date profit and loss statement, and we would also ask for full 2 years of tax returns. And you do have to be, if you are self-employed, you do have to be self-employed for at least 2 years and have 2 years of property taxes, or not property taxes, I'm sorry, income taxes. We'll also need copies of bank statements. Usually it's a 30-day statement. Divorce decree, if you're recently divorced, we would ask you for that. And if you've had a bankruptcy, we would get the discharge papers from you. And a copy of your homeowner's insurance information. We'll need that prior to closing. Mortgage qualifications, income and assets, reserve requirements. Usually, a couple of months of payments, PITI is required. Job stability, we want to see someone that has, great job stability, meaning you've been at the company for, a few years, or you've been doing the same employment for the past couple of years. Your debt to income ratio. Expenses cannot exceed 43% of your gross monthly income. And basically it's what are you comfortable paying? So your gross monthly income, that's before they take the taxes out of your check. So that's what we use to qualify you with. Your credit score is the most important factor. It determines your interest rate. Minimum score of 740 for the best rate and the lowest private mortgage insurance. And scores below 650 may not qualify. So it's a really good thing if you're thinking about buying a house, maybe applying, so you kind of know if you qualify and what your credit score is and things like that. Source of down payment funds. Borrower funds can be any of the following. Deposit, 30-day, we'll ask for a 30-day bank statement. If there's any large deposits or any type of deposits, we're going to ask for documentation as to where they came from. You can get a secured loan. If you have equity in your car, you can take a car loan out and take the equity out of that for a down payment. If you sell an asset, like the sale of your home, we would require a settlement statement from that. Earnest money, which is something that you'll put down when you make an offer, and that will be taken off the amount that you owe at closing. Gift funds from a blood relative, retirement accounts, and 401k, which your employer would have to approve if you were going to use that. So funds needed at closing, down payment money needed. So let's say we have a sales price of $175. 5% of that would be $8,750. So we would do a loan amount for $166,250. The interest rate is 6.375. This is a 30-year, so your monthly principal and interest payment would be $1,037.19. And then the reserve requirement, so you can have your principal and interest, your escrow, your taxes and insurance, and actually there should be PMI added to this, so it would probably be, maybe $350. So your monthly principal, interest, taxes, and the private mortgage insurance should be added in there as well. And then sometimes they will require a reserve. So And normally what it is 2 months principal, interest, taxes, and insurance. Closing costs, some or all of it can be paid by the seller. It kind of would depend upon your what you're putting for a down payment and how much the seller can pay. So the participants in the home buying process is your lender, your buyer, which is you, the person selling the house, your real estate agents, your agent and the seller's agent, possibly a home inspector, the appraiser, the escrow closing officer or title company, an attorney possibly, and the loan servicing company. So for the home buying process, you would want to meet with your lender so you can figure out your maximum loan amount and what the different options are and what you have for a down payment and what you have for closing costs. So with that, I mean, if you're paying rent right now, you know, if you're paying, I don't know, $1,300 a month in rent, and you kind of want to keep maybe that payment kind of similar to your house payment, so you know you can make that payment. So that's kind of, you know, that might be something that you want to look at, or if you think you want to, you know, go for more than what your rent payment is, we can certainly take a look at that too. And sometimes what I recommend people doing is, you know, if they're going from a $1,300 a month payment up to like $2,000, I'll say, you know, make that payment each month to see if you can afford that. And hiring a realtor, that's really important. Your mortgage lender and your realtor are very vital to your process. There's probably over 1,000 realtors in Rochester, and if you meet with one and you don't click, move on, because there's 999 other realtors that would love to work with you. There's a lot of good realtors in Rochester. And then you want to negotiate the offer. I mean, in this market, it's tough to negotiate because there's bidding wars and people trying to pay more than the actual house is worth. And you definitely want to watch that because the house has to appraise, and if it doesn't appraise, then you're having to come in with money out of pocket, and it gets to be a little tricky. So, and lowball offers, you know, that might turn somebody away right away, a seller. They might be like, no. So you want to definitely be careful with that. So your interest rate lock, when we receive your signed purchase agreement, within 3 business days of that, we can lock in your interest rate, and then we will send you e-disclosures, and that's a whole bunch of disclosures that you'll e-sign in return. You're gonna sign the same thing basically over at closing again. So they're just preliminary. And we will order the appraisal after the home inspection is done. If you choose to do a home inspection, you sure can. You'll pay for that and you'll work with your realtor on that. We'll go ahead, we'll collect $500 up front, and then we'll go ahead and order the appraisal. And when the appraisal is completed, you will receive a copy of that appraisal, and then it will go, your whole loan will go to our underwriter to make sure that we have everything, the appraisal, your pay stubs, your W-2s, your bank statements, all that, and they'll go through all of it and hopefully approve the loan. And final loan approval, that's when we have the clear to close, and the closing department will work with the title company to create documents for you to sign. Usually it takes 10 to 14 days and you will receive your final figures 3 days prior to closing. Final figures, you e-sign the closing disclosure to acknowledge receipt of your final figures at least 3 days prior to closing. So you're going to actually know your amount and what's needed at 3 days prior to closing. So you can prepare yourself and get your check or wire your funds to closing. And the closing, you sign the documents with the title company or attorney's office. 2 or 3 weeks later, you will receive a welcome packet in the mail with your loan number and online access instructions. So we actually work with a company by the name of QRL Financial and their servicer Loan Care. So those are the folks that are going to send you the welcome packet. And they're very good to work with. Or if we do a portfolio loan, what that means to you is we're keeping your loan here with the credit union, and we would have a company by the name of Dove and Mule. They'll work with you to get your payments set up, and you'll pay them directly. The homeowner's insurance. Homeowner's insurance, you'll want to start shopping for right away because there's a ton of companies that you can choose from, and they're all going to have different quotes for you. So you want to start that process right away so you kind of know what you're looking at. And sometimes after the file gets underwritten, we'll call you and we'll say, oh, we need an extra pay stub, or we need to know where this deposit came from. It's not a big deal. That happens probably more than not, so don't worry about that. So really, what determines your credit score? I think this is a great chart. 30% of it is what you owe. 10% is new credit. 15% is the credit that you've had for a while. 10% is a credit mix, and what that means is basically it's secured and unsecured debt. So secured debt would be like a car loan, secured your property, boats, motorcycles, things like that. And then unsecured credit would be a line of credit or credit cards, things like that. And then 35% is your payment history, so you definitely want to make your payments on time. And this is some credit report information. You can go and get your annual credit report, which you would want to do definitely to see where you're at. And I would say do that every year so you can make sure that nobody else is enjoying your credit with you. So these are the different numbers that you can call for Equifax, Experian, TransUnion. If you do freeze your credit, we'll have to have you unfreeze all 3 bureaus when we pull your credit, because we pull a tri-merged report and we pull from all of those bureaus. So that's something that would have to be done in order for us to do a pre-approval. And why do business with a credit union? We give personalized service. Most of us that work in this department have been in the mortgage industry for a long time. We have reasonable closing costs. We're very competitive. We have a discounted origination fee, which is 3/4 of a point, which other lenders are 1%. There's no prepayment penalties on any of our loans. We can do automatic payments. Your payments are due between the 1st of the month and the 15th of the month. You have web access to your mortgage information. The servicing retention is for the life of the loan. So what that means is if your loan is through QRL Financial, you're going to make your payment directly to their servicer Loan Care for the life of your loan. And we don't work on commission. We're straight income. And in 2021, we closed loans totaling $208.5 million for nearly 800 members across the United States. This is us. Donnie is one of my colleagues, and Dennis is my other colleague, and we work very well together. We are very passionate at what we do. Does anyone have any questions?
There was one that came in online.
Okay.
Do you have to have a pre-approval to buy a home?
If you're purchasing, so the question is, do you have to have a pre-approval to buy a home? I'm going to say probably 99% of the realtors are going to request a pre-approval letter. Even if you go to an open house, they might even want to see a pre-approval letter. If you're purchasing from a private party, they might not require a pre-approval letter, but I would say it's probably pretty good for you to have one, just so you know that, hey, my credit is good, and you know, you're kind of going to want to know what your interest rate is going to be. So I would say you would probably want to do that.
Earlier you said to get the pre-approval, it's a hard pull on your credit. What does that mean exactly?
Sure. So the question was, what is a hard pull on your credit? So basically what it is, when you apply for a mortgage loan, we pull from all 3 credit bureaus: TransUnion, Equifax, and Experian. When you go in to purchase a car, they're pulling from 1 bureau. So they're pulling from Equifax, I believe it is. So basically, we're taking a hard pull. We're checking all 3 bureaus. So that's what that is. Some people, I don't know if they can do like a soft pull, which is kind of just, maybe checking your credit, not doing the hard pull, but we actually do a hard pull. We can't do a soft pull on your credit. Any other questions?
How do you determine which mortgage is right for you?
So the question was, how do you determine what mortgage is right for you? That's a great question. It kind of all depends upon, how large you want your payment to be. I mean, we can do a 15-year, we can do up to a 30-year. So if you don't mind your payments being larger, you would definitely want to do a 15-year because you're going to be paying less interest in the long run versus doubling it by going to a 30-year. And, the difference between like an adjustable rate mortgage, those are kind of popular right now just because the interest rates are higher. So for instance, on a 5 or a 7-year ARM, the rate is 5.5%. And on a 30-year fixed, the rate is 6.375. So the rates are a little bit lower. We haven't been in this higher rate environment for a lot of years. So ARM loans haven't been very popular, but with interest rates increasing, they're a little bit more popular. An FHA loan, really, if your credit is, a little iffy, a little bit lower, and you don't have a lot for a down payment, FHA would be the way to go. Like I said, the mortgage insurance, the private mortgage insurance stays on the loan for the life of the loan. It doesn't fall off like a conventional loan, where when you hit 78% loan to value, the mortgage insurance drops off. So that's kind of the difference between those. And some people might start out with an FHA loan and then refinance into a conventional loan. There's quite a few people that have done that. And then the VA loan, the veterans loan, that's basically you have to be in the service to qualify for something like that. Yes?
How often do interest rates change?
Good question. How often do interest rates change? Well, in this environment, sometimes they change 2 to 3 times a day. It's just kind of whatever the market is doing, and the market's been going crazy, so they are subject to change at any time without any notice. Any other questions? So we're doing grand opening, our schedules. So tomorrow, Thursday, Friday, and Saturday, these are some of the seminars, and we really would love to have you come, and if you can't come online is great. I know the next couple of days are amazing, so, and we'd love to see you on Friday for our financial fair and open house, and Monday, bring your shred in, because we're doing shredding on Monday, so I hope you guys can make it in. We'd love to see you. Thank you very much.